private markets investment management firm Hamilton Lane have announced that its global private assets fund has reached approximately $6.3 billion in assets under management. Since launching in 2019, the fund has seen a steady increase in demand from private wealth and institutional investors. So what's behind that growth? Well, Scott Thomas, Hamilton Lane's head of Private Wealth Australia, joins us now. Scott, good to see you.
Great to be with you, Andrew.
Well, in fact, we're going to focus on evergreen structures in private markets. What is an evergreen structure?
Well, really, classically, the industry has grown significantly over the last 20 years on the back of closed-end structures. Closed-end structures are terminal structures where you're typically investing for 10 years. You commit your capital and you get drawn down over a period of time, and then over time, you start to see your money back as the managers start to realise the gains in a portfolio. Traditionally, these closed-end vehicles have been quite onerous in terms of the minimum investment amount, so typically $5 to $10 million of minimum capital investment that you would commit to those structures, and the illiquidity has really kept a lot of investors out of the market. So whilst the industry has grown dramatically over the last 20 years, it's really been the bastion of institutional investors that have focused on investing in private markets. However, over the last 5 or 10 years, you've started to see some innovation come through in the form of evergreen structures. And evergreen structures, as the name suggests, they're perpetual instruments. You're investing into a private market fund or structure or strategy, which is perpetual in nature, and you're able to invest in that on a more frequent basis and get your money invested into a seasoned portfolio in a fully committed way from the first dollar that you invest in.
Has that made it more readily accessible then for particularly wholesale investors?
Yeah, evergreen structures have really helped provide access to high net wealth investors because they've seen the performance of the private markets over the last 20 years. Private markets, our data shows us that private markets have outperformed their public market counterparts for the last 20 years in a row. So quite significant outperformance there. And so it's pricked the ears of these high net wealth investors, but really they demand something different. They want better access or more simplified access, better transparency and more frequent access. And so that has seen the rise of these evergreen structures come through the market over the last 5 or 10 years in particular.
What do those investors need to consider then if they are actually investing in an evergreen fund?
Yeah, it's a really good question. I think not all managers are created equal. Evergreen structures are a great innovation for the industry, but we believe that there are some high barriers to entry for providing these evergreen structures to market. You need scale, you need brand. Some of the critical things that you need, deal flow. So you want to make sure you have enough deal opportunities to actually place into a fund, because you are your dollar is going into a fund and being invested, fully invested from the first dollar that you put into the fund. So you need a manager that has adequate deal flow to allocate into the market. Relationships matter. If you don't have good relationships in the market, then you don't get that deal flow. So not all managers are created equal. Critically, data and analytics. You need to have a good lens on companies that you're looking to invest in. You need to understand what you're investing in. There is no such thing as a Bloomberg terminal in private markets like there is in public markets. So not all data is created equal. So does your manager have good access to data and analytics? And I'd say finally, portfolio management. Portfolio management, an investment team that focuses on making sure that the allocation for the portfolio is properly allocated, dynamically allocated across different market cycles, across different investment types, across different vintages, across geographies. So there's a number of elements that you need to do in your due diligence to ensure that you're aligning with the right counterparty.
Certainly an issue with non-listed assets is a problem with liquidity or illiquidity. How is that, what should an investor consider if they are getting into evergreen structures? Is there something of a solution there to solve that illiquidity problem?
Yeah, so typically these closed-end structures will have a 5 or 10 year commitment period. And so that illiquidity is 5 or 10 years. So you typically can't get out of a closed-end vehicle unless you want to sell it in what's called the secondary market, typically at a discount. But evergreen structures do allow some what they call outbound liquidity on a limited basis. The industry standard is typically 5% per quarter of the overall net asset value of the fund. But it's really important to highlight that the liquidity is not guaranteed in any way, shape or form.
If you are investing in an evergreen structure, then what sort of assets would you be investing in?
Yeah, so typically you're investing in assets across the market, the private market spectrum, but Some managers invest in particular asset types, whether it be infrastructure or credit. Some managers focus on private equity. The private market landscape is quite broad. There's lots of different opportunities out there nowadays across geographies, investment types. So it depends. The answer is it depends, and there's different flavours for different for what people are looking for across the private market spectrum for people to invest into.
Historically, at least, though, private markets tend to outperform public markets, so that's certainly a bonus, isn't it?
Indeed. And as I said up front, the data that we've got goes back many decades, and we do show quite a significant and persistent outperformance of the public market counterparts over many years.
Scott, thanks for joining us from Hamilton Lane.
Thanks, Andrew.